Hello and welcome back to CEO.CA's Inside the Boardroom. I'm Rachel Lee, and today we're talking about Goldshore Resources, focused on the Moss deposit, which is located 100 kilometers west of Thunder Bay. Moss hosts 1.54 million ounces of gold at 1.23 grams per ton in the indicated category, and 5.2 million ounces of gold at 1.1 grams per ton in the inferred category. With us is Michael Henrichsen, CEO and Director of Goldshore, ticker GSHR, here to tell us a lot more. Michael, let's get right into it. You're a relatively new CEO. You started just before the summer. Can you give us your vision for the company as CEO?
Absolutely, and thanks for having me. Really, Goldshore is a very simple story. We've got a large-scale resource with superb infrastructure just off the Trans-Canada, 100 clicks, as you say, from Thunder Bay. And our job is to advance this through the economic studies and really get towards a construction decision. We believe this is going to be a mine. We have the team to execute it. And ultimately, as I say, we have to run through our economic studies, advance the project in a methodical manner, and move this towards a construction decision.
And Michael, Goldshore has a YouTube channel, and on one of your videos, I saw that you talk about the blue sky potential at Moss deposit. Can you tell my viewers a little bit more about that?
Yeah, certainly. I mean, we have two parts to our growth pillar, ultimately. The blue sky is, can we find another Moss deposit? Is there something else out there lurking? And quite honestly, I was quite surprised. Usually when you get a resource of this size, the region's been looked at extensively. And some basic exploration work hasn't been done here. With respect to geochemical surveys, geophysical surveys. And really the strategy here is to just fingerprint Moss. What does it look like geophysically? What does it look like geochemically? And then let's go apply those same techniques, looking for similar signatures in and around Moss. So that's sort of the blue sky discovery potential that we have. There's also growth near the deposit. In the top 200 meters, there's a number of targets in and adjacent to the conceptual open pit that we believe are going to add more ounces. And we're definitely going to go look to expand the resources, very near the deposit, as well as looking for another one. So we're in good shape with respect to growth.
And an upcoming catalyst for the company is your PEA. I understand that G Mining Ventures will be leading it and that it should be completed in Q1 of 2025. Can you tell us a little bit more about this?
Absolutely. The PEA will be our biggest catalyst moving forward. It'll be the first economic study done on the Moss deposit, and G Mining Services actually is the group that's doing it. They're sort of best in class to my mind, and they also completed the feasibility study at the nearby Greenstone mine that Equinox has. So they're in a very good position to evaluate this. We expect this to be done in Q1 of 2025, and we're fully financed for that to occur. What we're really looking at in terms of this PEA, beyond giving those first set of economic indicators in terms of its performance, is we want to do a PEA plus. And by that, we're not out here trying to create a marketing document. We're here to give realistic guidance to our investors. And we're looking at using more stringent cost parameters than a typical PEA, right? That's one of the things that we're looking to do here. The other thing that we're looking closely at is a phased production approach. We believe there's the potential to do that here. We're very fortunate in that we believe there could be a good higher grade starter pit available to us. Obviously, G Mining will let us know exactly what that looks like moving forward, but that gives us a real advantage in terms of how we're going to handle the CapEx going forward, and just to have some optionality in terms of how this deposit could potentially turn into a mine.
Well, let's talk about CapEx for a second. I'm curious about how you plan to minimize capital expenditures and also, maximizing IR when it comes to development.
Yeah, it goes back to the staged production approach. I mean, ultimately, if we can demonstrate that we do have higher grade production at the start of a mine life with a smaller scale production profile, let's, for instance, say it's 10,000 tons per day, that's obviously going to reduce the CapEx required. What we would like to do in that case is pay it off, get cash flow positive, and potentially use that cash to fund an expansion in the production, which could be up to 30,000 tons per day. Those are roughly the parameters that we're looking at right now. And obviously G Mining's doing the work to really let us know what that can look like, in a realistic sense.
Great. And moving on to permitting, can you give us some high levels of focus here so that we can get permitting moving efficiently and quickly for Goldshore?
Yeah, absolutely. I mean, permitting is obviously one of the challenges that any development company has. And what we're trying to do here with this PEA Plus is get a project description that we would be confident in. Once you have a project description and you sort of know what you might be looking to permit, you can start addressing the specifics required. And that ultimately is continued discussions both with the First Nations and the regulators prior to entering the formal permitting process. Ultimately, we don't want to just spring a mine design on somebody and say, okay, it's here, let's approve this. We have to work together with everybody through time so that we can enter the permitting process with some consensus as to what this project can deliver to the communities, what it looks like to the regulators. And so our strategy will always to be proactive with our permitting approach, getting the right work done early so we don't create bottlenecks in the permitting timeline. That's a focus for us. Always be proactive and engage with all of our stakeholders so that, we do not create bottlenecks. That's really the mission that we have here.
Yeah, thanks for that, Michael. Now I want to move on to talking about financing. Financing-wise, do you need any financing in the next 12 months or no?
Well, look, we are fully funded to get ourselves through to the end of the PEA. We currently have roughly north of $7 million cash in the bank. So there's no need to finance here in the moment. Look, if the window presents itself and the share price is performing and we're comfortable with the dilution and we have good shareholders coming in, certainly we would look at doing a financing. There's a lot of work to be done to advance this asset, but we're in a very good position currently from a financial standpoint.
Great. And Michael, before you go, especially because you've bringing a ton of experience here to Goldshore, when you see Moss, what factors make you confident that this is a Tier 1 project here in Canada?
Yeah, it's very simple. I mean, it's just its position next to the Trans-Canada and power lines, its scale. We currently have, roughly 6 million ounces combined indicated and inferred in a single open pit. That's pretty incredible. As we work towards the, phased production approach with G Mining, I think, we should see some higher grades early in the mine life. And that's obviously crucial, right? That's going to affect your payback period. It's obviously going to affect, your IRR, et cetera. And so I think just, Mother Nature's being kind here in terms of the placement of the asset and also the grade distribution. And we look forward to daylighting those opportunities, when the PEA comes out.
Great. Well, Michael, that's all the time we have for today. Thank you for being here. That's Michael Henrichsen, CEO and Director of Goldshore Resources, ticker GSHR on the Venture Exchange.